Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 4th at about 1 p.m. Eastern. Well, U.S. employers boosted hiring in May and raised wages as they competed for workers, with millions of unemployed Americans at home, likely because of child care issues and generous unemployment checks. The Labor Department's closely watched employment report issued today offered some assurance that the economic recovery from the pandemic recession was on track after worker shortages, also blamed on lingering fears over COVID-19, sharply restrained employment growth in April. And on that note, let's move on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 index. This is the exchange-traded fund that closely follows our S&P 500 benchmark index itself. Now, today when I captured this chart, as you can see right over here on the hard right edge of the chart, the SPY was trading at $421.84. That's about 42.18 on the S&P 500 itself. Now, we haven't really gone anywhere since you and I talked a week ago, last Friday. We haven't really gone much of anywhere. We're right about where we were then, so we've pretty much been trading water. And right now, the SPY remains at about 0.5% from its all-time closing high on May 7th, back up here, at $422.12. So we're just right there. Now, as you can see from this little bit of history here, after touching that new all-time high, closing high on May 7th at 422.12, the SPY did fall down through its 20-day moving average, the red line, down to its 50-day moving average, then rallied back up to the 20-day. Then the 20-day, which used to be support, then acted as resistance right here. Then it fell back down, right back down to where it was, down here to about 405. So see how price came down to the 50-day moving average at about 405, rallied back up, got hit on the head by the 20-day moving average, fell back down, retested that prior drop down to about 405. Then price rallied back up in the past week and a half, back over the 20-day line. Now, once again, the 20-day line is acting as support. So there you go, but we haven't gone much of any place, just moving along sideways here. You can see the 14-day RSI moving sideways, and the MACD is sound asleep down here. Now, of course, there's the old saying, leave in May and go away. The old market saying, I don't know that that's going to be true this year, but please do know that quite a few institutional traders that do cause a lot of the big market moves do go on vacation in the summer, so many times our volume gets a little lower, as you can see. Again, why do we follow the SPY and the QQQ that we're going to look at next? We follow those indexes because the broader swath of stocks in our stock market will follow these two indexes. Not all, but most of the stocks will follow them higher or lower. So we kind of use them as our best shot at a crystal ball to see where our own individual stocks might go. So basically here, again, we're trading sideways over the 20-day, over the 50-day. We got basically support at the 20-day at $416.57. The 50-day has been acting like a trend line since back in October of 2020. Look at how neatly the green line has come up here, and for all intents and purposes acted as a perfect trend line. That is coming in now at $412.87. So we do want the SPY to stay above the green line. After that, we start moving into support down here, right about 390 or so. And then, of course, the 200-day moving average coming in at 375 and change. Hopefully, we don't get down to that average because that could cause some problems. But we're not there, and it doesn't look like we're going to get there very soon. So in the coming week, just keep an eye on the SPY. If it continues to trade sideways, that's fine. I'll see if it has to fall a little lower here, or perhaps it moves to new highs, and that'd be great for high momentum in tech stocks. Okay, for our next chart, we're going to look at the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that closely follows our NASDAQ 100, major index in the stock market, certainly a leader. Top holdings include Apple, Amazon, Alphabet, Facebook, Microsoft, Intel, Netflix, that whole group. So this is an important index. Now today when I captured this chart, the QQQ was trading at $335.64. On April 26th, we had a new all-time closing high back here at $316. No, that's not right. I'm sorry. $341.63 back here, $341.63. So now we're just trading a bit below that. After that all-time high, of course, the QQQ did fall down to the 316 mark right here, then rallied back up. It got hit on the head by the 50-day moving average, fell back down. Look how it retested price back down to 316. You guys, you got to know that this whole chart is full of retests. It doesn't mean it will always happen, but look here how when price came up near the, or it was the all-time high back here earlier in April, came back down, rallied back up to that high to see if it could get over it and couldn't do it. And so there's a retest right there. There's a lot of retests, both to the upside and to the downside when it comes to price, especially orderly price. So just know that. It's just part of knowing about technical analysis. So again, it came down to this low at 316, tried to move higher. The buyer said, nope, we're not paying any more right now. So it fell back down and retested back to 316. Then rallied again, this time got enough buyers to move up and over that 50-day moving average, slid a little bit yesterday, and today, again, as I said, it's trading at 335.64 on a nice up move for tech stocks and momentum stocks today. So we do have this new, we do have nearby resistance, we can call it here at 326, just right where it is, I'm sorry, 336, right where it is right now. Of course, we have the all-time high resistance up at, we'll call it 342. We've got the 50-day moving average here, which could act as support at 331. We've got more at the 20-day at 328. We've got this trend line that I also drew here. This is a major trend line because it touches 3 pivot lows. That's coming in about 321, 320. And then, of course, the 200-day down at 308. So like the SPY, the Qs are moving sideways here. It's just going to take some waiting and watching on our part to see what it does in the coming weeks. Our final chart today is a daily chart of the First Trust Cloud Computing ETF, symbol SKYY. The SKYY top holdings include Oracle, Arista Networks, Alphabet, VMware, Microsoft, that whole group. This particular ETF was initiated or started in July of 2011. It has 66 holdings. Again, I just read to you some of the top holdings. It did make an all-time high back here of about $112 in February this year. So you can see, you can say, hey, Toni, look at the head and shoulders here, potential head and shoulders, and I see it. We can see a shoulder here, we can see a head here, then we've got a couple of potential shoulders here. Look at the retest here. But you know what? When a head and shoulders forms but doesn't follow through to the downside, and we could draw a neckline here if we wanted to, it doesn't follow through to the downside, then that, if in fact it forms a continuation pattern, then that stock just may be a whole lot stronger than indicated because it couldn't follow through on a head and shoulders, and again it became a continuation pattern. So we see how the SKYY, the sky moved up, as I said, to that 112. Then it fell down through the 20-day, the 50-day, down to this support line from prior support in December, held there, moved up, got hit on the head by the 50-day moving average, retested that support, moved up back over the 50-day, moved down up to about 104, back up and retested that high, and then could not. It was, look, this line starts here. So that's quite a bit of resistance there. That's quite a bit of sellers saying, hey, if it gets that high, I'm going to sell it. So it moves back down here to the 92 line and now has moved back over the 20-day and is sitting on the 50-day moving average. The RSI is the RSI is trending higher here. The MACD is a little higher to sideways. So with techs moving higher today pretty strongly, what I'm going to do here is, if in the coming week, and again, the SKYY is trading right now at $99.18, just above the 50-day moving average. In the coming week, and the 50-day moving average, guys, is coming in at 98.31. Okay, so that gives you a line there. If in the coming week the SKYY can remain above the 50-day moving average, I intend to add, assuming the tech stocks are strong and the market's strong, I intend to add a small position to my trading portfolio with an initial stop down here below the 20-day at $96. If the SKYY continues to rise and if it can move up and over 104, which is the next line of resistance, I will add to my position. And of course, by then, my stop will be a trailing stop, gradually moving up underneath the SKYY. So if techs remain strong in the coming week, you may want to keep an eye on the SKYY. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs. I think you'll enjoy my powerful strategies. They're devoted to swing trading, trend trading, bottom fishing, and many more. My programs are easy to understand, and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen right here, or simply click on the orange button below. And now let's go on to final thoughts. Let's ask ourselves this question this week. How sharp is my response ability? How sharp is my response ability? Now, we all know the word responsibility, and sometimes when we hear it, we tend to groan. Yeah, me too. When we hear, take responsibility for your actions, sometimes we feel like a weight is being put on our shoulders. Oh no, I don't want to. When it comes to trading, you really need a lot of responsibility. When it comes to trading, here is another way to look at the word that can refresh and reframe your responsibility perspective. Let's look at it this way. How sharp is your ability to respond? And please hear me say respond here and not react. The word react brings up a whole different set of circumstances than respond. Respond is controlled. React is just that. It's like you jump backwards, that kind of thing. So how sharp is your ability to respond to different market environments and your approach to the market? As traders and investors, our first responsibility at all times is to our capital. As you've heard me say over and over again, protect your capital at all times. And I have to say, that's your responsibility. But first, how is your ability to respond to the market each morning? Let's break it down. Or how is your ability to respond each time you begin to enter a trade? In other words, we're back to what is your response ability. If you were going to enter long positions, but the market was heading lower, maybe you backed off. Maybe you responded by setting those trades aside for now, and that's probably was a good idea. Or on the other hand, if the market is headed higher, Maybe you responded by analyzing the positions you were going to enter, double-check your trading plans for each and every trade you're going to enter, and see if any are touching your target price. Then maybe you enter. And once you enter a trade, your next response is to set a hard stop with your broker. I find that is a wonderful thing to do. Then, when one of your positions approaches your profit target, perhaps you respond by taking partial profits. Maybe you take all profits. Maybe you take partial profits and then raise your stop on your remaining shares. Those are both responses. So take a few minutes each day to review your ability to respond to the market environment, respond to any new trades you want to enter, and certainly to the risk-reward management of your current positions that you have in place. Remember, the ability to respond is a skill set that will keep your trading profits consistent from now on. Finally, please know that if you'd like to become a consistently winning trader, this is a great time to check out my trader training programs. To see all of my online training programs, simply go again to the link on this screen up here or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.